Good evening, everybody. Thank you for joining us. No, it's a busy week probably for everybody on the call, but we appreciate you taking some time out of your week to join us here. We think it's going to be a good informative presentation. Tonight we have Jason Collins from URL Insurance Group here presenting long-term care to the group. For those of you that don't know URL Insurance, for those of you local to us, you can actually see their building right off of 81 in between the Progress Avenue and Lingelstown Road exits. So they're a local firm. Jason's been there for a while. And fun fact, Jason's son, Caden, actually interned for us last summer. And as long as he doesn't get drafted in next year's, MLB draft, we're gonna have him back at the
You're
office
safe.
as
You're
long as he wants
safe.
to be there.
You're safe.
Topic that is on a lot of our clients' minds. Jason's here to kind of clear some things up, dispel some myths, talk about some new products that are available. So we're very excited to have him. Jason, go ahead and take it away.
Yeah, thanks, Sebastian. I appreciate that. Like Sebastian said, my name is Jason Collins. I work with URL Insurance Group. At URL, I specialize in long-term care, life insurance, some annuities, single premium life, that sort of thing. And November's Long-Term Care Awareness Month, so there's no better time to be putting on a presentation and thinking about long-term care or long-term care derivatives than right now. So it's fantastic that everybody's spending some time with us this evening. So what is long-term care, right? We all hear about it. We all understand that we should start be looking at it. It is long-term care insurance. That is LTC. So basically, long-term care insurance is insurance to help with your ADLs. So as you get older, your ADLs in the insurance world are your activities of daily living. Everything that we take for granted. It's taking a bath, dressing yourself, using the restroom, eating, transferring from maybe the couch or the bed to, the couch to the bed or the bed to the couch, and then continence. So it's really help with that when it is needed. So it can occur at a home or an assisted living or nursing care facility. So that's one of the things that we want to talk about today is we're just going to be doing conceptually in a high level overview of what long-term care and some long-term care alternatives are out there in the market that Sebastian and his team can help you with. We're not going to get into product specifics really or anything like that. So long-term care, this is something I wanted to put in. This is always a misnomer. A lot of people think that long-term care and Medicare, they're one and the same. Well, that's yes and that's no. So Medicare will pay for a short period of time for long-term care. So let's say 1 to 20 days, it's fully covered. If you go into a skilled nursing care facility, let's say, for example. If you go to 21 to 100 days and you're in the skilled nursing, well, now you're going to start paying some out of pocket. Right now in 2025, it's about $204 a day is the max. And then if you go 100 days and up, well, then it's a fully out of pocket for you. So yes, even though Medicare does cover a little bit of it, it's not going to be as robust as having a traditional or one of the hybrid that we'll get into long-term care products. So that's just one thing that I wanted to touch on with everybody because again, I feel like that's very important. So why are we going to talk about long-term care? Well, again, Americans are living longer. The life expectancy is in the United States right now is 78 and a half. So that's pretty awesome, and so there's the likelihood of people using it are going to gain traction as they get older. So again, roughly 70% of people age 65 and up are going to need some sort of long-term care. It's interesting, Sebastian mentioned my son, Caden, and, he's in college. He's a senior in college, as I mentioned. And, we all spend time when they're little babies and they're born and we spend time saving for their college education. Not too many people save for their long-term care, the older when they get to be 65 and the ADLs and they need help with that. So 62, I looked this number up, 62.8% of kids go to college that graduate from high school. So more people are going to need long-term care than they will kids going to college, but yet we all should, but yet we save for college and we don't prepare for any unforeseen health issues in our life. So if you're not thinking about it currently, reach out to Sebastian and his team and have those conversations because it is so important. Costs are rising. It is important to have long-term care or long-term care derivatives. Long-term care, an event can impact families emotionally, physically, and financially. It's interesting. I hear that for those of you that are on the call that have sisters or daughters that live closest to you, talk to them because statistically, those are who is going to be taking care of you. So I have three kids. In my instance, my daughter, who is the oldest, she's going to be the one that I'm going to have to lean on, not Caden, not my other son, Jace. It's going to be Kara. So she loves hearing that. She wants to spend as much time as she can with her old man. But I want to be able to help her out when I can, right? So statistically, it's going to be the female that lives closest to the parent or closest to those are the ones that are going to be taking care of the families or of the people. So what is the cost of long-term care? Well, here are some national averages that I ran. Home health care, $75,000 a year. That's to stay in your house, to have somebody come into your home. Most people want to do that. Most people want to stay in their home. So you're looking at having $75,000 a year just to have a nurse come in and help you with one of those or two of those or multiples of those ADLs, those activities of daily living. Assisted living is about 70,000. Private nursing, $120,000 a year. I was actually just one thing about me is that I work with not only agents like Sebastian and his team, but I also work with clients like yourself. So I get to see a lot of different angles of long-term care. And there's there's Masonic homes that are near where we're at here in Elizabethtown, and couple comes in, says that they're paying for their mom to be at Masonic homes, $18,000 a month for their mom to be cared for in Masonic Homes, which is a private nursing area. And I heard that number and I just thought, oh my gosh, like that number floored the heck out of me. $18,000. So again, it's expensive. We plan for our kids in college, but it's now our time to start planning for ourselves. So here's the biggest thing, right? So to me, this is why you buy or you think about talking about and listening to about long-term care is the impact that it has on the families. So without a plan, family members become the caregivers. Well, I know if my dad or my mom are at home health care, I am in the insurance world. I do not know how to care for my mom or my dad to the degree that they should be cared for. Um, I would be doing them a disservice by going in there and doing it. And quite honestly, it's taking time out of my life to go and care for them. And I would do that. We all would do that, sure. But what if there was a better way to go about? So it can lead to lost income. It can lead to physical and emotional strain. It could lead to difficult financial choices. Planning early provides freedom and dignity. I use this story a lot too. So I have my two grandparents, my family's from out in the Pittsburgh area, and my grandfather has had MS. So he had MS for 25 years or so. And they did not prepare properly. And they had my grandmother had to care for my grandfather. And you can imagine a grown man that hasn't really moved in a lot of years can pack on some pounds and get pretty heavy. So there is my 95-year-old grandmother. Every time my grandfather would fall, she couldn't pick him up. Didn't matter if he was in the shower or on the restroom or just in his bed or whatever. She was now in charge of caring for him and trying to get this grown man, and she just couldn't do it. So she had to call the fire department every single time that my grandfather fell. And it was embarrassing for him. It was embarrassing for her. So it is just a lot of, essentially that's what you're doing by looking at these is that I'm going to minimize the negative impact that on my loved ones. I hear stories all the time. hear stories all the time. So if you have the opportunity and the means, have those conversations with Sebastian and his team. So let's talk about the pros and the cons. So there's two different types of long-term care that I want to talk about today. You have the traditional long-term care. That is what we all know. That's been around for years and years and years and years, right? So here are some of the pros. The traditional long-term care, that can be a customizable coverage. You can add, if you're husband and wife, you can do a rider where there's a shared care or a policy. Let's say you have a coverage for 4 years, and husband needs 5 years worth of benefit coverage. Well, they can borrow from the spouse. So that's shared care. You can do anywhere from 2 to 4 years worth of long-term care benefit monthly coverage. So there's a lot of things that we can do. You can eliminate waiver of home premium. Waiver of home health care, like the waiting period. So again, it's very customizable and very strong protection because it is built for long-term care. It is built for you going into a nursing care facility. It's built for you going into it, staying at your house, which again, like I said, most people like to stay. Sorry, my buzzer's going off. And it's got strong protection. So what are the cons of traditional long-term care? Well, here's the big one. Traditional long-term care is strictly only for long-term care. So if you go and you buy it and you go out on the street and you get hit by a bus tomorrow, you've now given the premium dollars to the long-term care CEO for him or her to buy their third beach house somewhere down in Key West. So it's a use it or lose it proposition. You don't get anything other than the long-term care. Here's another thing that I see on the daily. Premiums may increase. So what you purchase today may not necessarily be the premium that you're paying tomorrow or a year from now or even 5 years from now. I've seen it happen, and at that point, then everybody's going to have to make decisions as far as, do I hold on to the policy? Do I not hold on to the policy? Do I make tweaks and adjustments? So to me, that's a con because I want to be able to buy something and I want to be able to use it when I need it. And quite honestly, it can be tricky to qualify for. The underwriting, they underwrite for health, not life, right? So if somebody has a cane, somebody's walking around like that, chances are you might get declined for something like that, right? So it can be hard to qualify. One thing that I want to bring up, females are more expensive than males in long-term care, right? So like in life insurance, males are expected to die sooner than women. So our premiums are more expensive because the insurance companies are going to pay out. Well, flip that on long-term care because women are going to live longer than men. The insurance companies expect those those benefits to be paid out for a longer period of time. So don't be surprised when you go and you get those numbers in front of you and the female is a little bit more expensive. Not much, but a little bit. And I just always wanted to make sure that I clarify that. There's not a lot of traditional long-term care companies out there anymore, quite honestly. Because of the cons that I just mentioned here before. So a lot of the companies are getting out of it. They do have some out there, but they are starting to get out. So let's look at some long-term care examples. So in this instance, we have a male age 60. We're looking at a 4-year benefit. Premium is about $260 a month. And again, that's $260 a month right now. Can't guarantee. I can't sit here and tell you it's going to be $260 tomorrow. But in this instance, year one benefit, you get $4,000 a month. Now, I do like to add the cost of living adjustments on these. So in 20 years, your policy can grow to about $7,000 a month. Okay. And long-term care policies are residual payouts, or I'm sorry, reimbursement payouts, meaning that you pay up front and then the client, you would then submit receipts and then the companies would then reimburse you for approved expenditures. And we talked about this. There's not going to be any death benefit there. So it's strictly long-term care. That's traditional long-term care. The industries, and this is what Sebastian was talking about, some of the newer options that are out there, these linked life long-term care policies. Now, these are still considered long-term care policies, but instead of it being the use it or lose it that we talked about that the traditional has, there is a component of life insurance involved to this. And I hear, Jason, I have too much life insurance. I don't need any more life insurance. Well, don't think of it as life insurance. Think of it as return of your premium. So if you do buy that policy and you do go out and get hit by the bus, somebody will, your beneficiaries, your loved ones are going to get a lump sum of the money that you put in. Okay, so it combines life insurance with long-term care benefits. It provides the flexibility. When I say flexibility, because it's a life insurance policy, it has cash growth to it that if you ever decide to walk away from it, you're able to then take that cash with you. Say, Sebastian, I got this, this cash value. Let's invest this somewhere else. The traditional long-term care, you don't have that option. Locked in premium prices, to me, that's huge. When I buy something, I don't want to have to worry about, is it going to raise? Am I going to be able to afford this in 10 years from now? I want to know this is the price and this is what the price is going to be until the end of until the end of it. And when you buy these linked life insurance long-term care policies, traditional long-term care policies, those premiums run forever. There's no ending in sight. With these linked life long-term care policies, you can choose. You can choose a single pay if you have a couple bucks. You can do a 5-year premium payment schedule. You can do a 10-year, depending on your age. You can do a pay to 65. They even have pay to 100s. So there's some of the flexibility that we talked about as far as being able to do things that you couldn't do with the traditional long-term care. As a matter of fact, they even make it so easy for you. There's a thing in the business world called qualified money and non-qualified money. Most of this is non-qualified money because it's a life insurance policy. But there is ways that if you have qualified money, which is pre-tax, post-tax, that you're able to buy policies like this. So again, if it's something that you're interested in, talk to Sebastian and his team. These are simplified issue underwriting. A lot of times you're not even going to have to meet with any sort of nurse or a paramed to come into your office. It's a telephone interview on the phone. They ask you a couple health questions. They do a cognitive screen. What day of the week is it today? What color's red, that sort of thing. They just want to make sure that you're all there cognitively. Maybe 40 minutes, 30 minutes on the phone, and then you get an approval right there. Or if you don't get approval, you now know that you should go into a different direction. So they're very easy to get. So just the ease of use, the flexibility that they provide, the coverage. I hope everybody can see why the industry is starting to gravitate towards these linked benefits more than just the one-all traditional life insurance. So let's talk about the
Jason, can I say something real quick?
absolutely.
And Jason's talk when he mentions pre-tax or post-tax money. So, a lot of times we'll have clients come in and say, well, all my money's tied up in my 401k, or I have all this money in my traditional IRA. I don't have good cash flow, or I don't have a whole lot of money in the bank to pay for long-term care. That's okay. There's going
That's
to be
okay.
tax consequences. Yeah, it's okay. There's going to be tax consequences to it. But if you are very concerned about long-term care, there are ways to fund it out of your qualified retirement. So 401k, IRA assets. So there are ways to do that. And like Jason said, give us a call. He and I will hop on the phone. We can talk you through some of those options and what they look like.
That's right. Thank you for clarifying that, Sebastian. So let's look at the linked benefits example. Same thing. I try to do some apples to apples for everybody. Male age 60, 4-year benefit again. So the linked benefits we talked about just going back, the traditional, you can go anywhere from 2 to 4 years. The linked benefits, a little bit more flexibility that we talked about. Depends on the carrier that you decide to go. You can go as low as 2 years and as high as unlimited. So there's carriers out there that provide lifetime long-term care benefits for folks. A lot of times I like to use the lifetime benefits if I hear that somebody may have some Alzheimer's or dementia in their family, something like that, to where the brain starts to go, but the body is still intact. I would look at that. A lot of times I look at if it's a joint husband and wife want to get a policy together. To me, it makes a lot of sense instead of we talked about the shared care and having them share the pool of money. Well, with an unlimited, they both have unlimited pools of money. So if that's important to you, Sebastian and his team can help you out. So as you can see here, the premium's a little bit higher, right? About $200 more a month. It was like $260 a month for the traditional long-term care. But you get so much more with this, right? You get the life insurance, you get the long-term care, you get the cash value, you get the guarantees, you get the flexibility. So the same monthly benefits, $4,000 day one. So if you use it day one, you get $4,000 a month. If you just sit there and let it grow for 20 years, just like you would with the traditional long-term care, it's about $7,000. So no real difference there in the benefits. But here's where you do get the benefits is the year 20 benefit paid. If you should pass away in year 20, your beneficiaries would receive $108,473. And now you've paid into in year 20 $108,473. So you're literally, like I said, they say it's life insurance, but really to me it's just return of premium, right? You're not wasting. It's just reallocating that money to either use it for your long-term care needs or give it to your beneficiaries. I like to look at it as like leasing the car versus buying the car, right? Traditional long-term care is like leasing the car, you use it, you get it for a couple years, and you turn around and you give it back to the car dealership, and you get another car and you have nothing to really show for it. Versus the linked benefits, it's owning the car. You get the cash value, like I said, you get the long-term care, you get the life insurance. So those are the difference between the two with the linked benefits and the long-term care. So how do I get started, right? So the first step is always the hardest. I saw that. And that's really anything in life. Anything that we do, if we're going to go out and run a marathon, the first step is always the hardest. But how do I get started? Well, you did it here. You joined us tonight. You're on the Zoom call. You want to assess your goals and your health situation. Okay, so certainly talk to Sebastian. Him and his team will sit down. You guys will talk about your goals, where the pitfalls may be, where we can kind of fill in the gaps. And you always want to look at your health situation. Talk to Sebastian and his team. And I cannot stress this enough. If it's something that you want to do, please, I beg you, don't wait. Do it, because you get these policies when you're healthy. I see it all too often to where, folks are scrambling trying to get insurance and they can't get it because they've been diagnosed recently with some sort of ailment. And it always breaks my heart. So there's three things that, it's age, it's your sex, and it's your health. Those are the three driving forces with insurance, long-term care. And so please, I beg you guys, if there's nothing else you take from here, apply where your health is strong. Don't sit on it. If you're thinking about it, pull the trigger. Pull the trigger. All right. So that's pretty much what I have for everybody. Just, like I said, I just wanted to kind of explain everything. Sebastian, do you have any questions?
Yeah. Thanks for doing this. Could you talk about, all right, so obviously we want to get to people in their 50s, early 60s, have these conversations. Let's say that time has passed you by. You're a little bit past that age. You're getting up there in years. Your health's not the greatest. Could you talk a little bit about maybe what some options people would have? Like I know you just ran me a case the other day where I think maybe like an accelerated death benefit was possibly involved for someone that was in their 70s. So could you talk about some other options that folks that are past those prime years for buying long-term
Yeah,
care might have?
absolutely. That's a great question, Sebastian. So we have solutions that go up to age 85. Most of the traditional long-term care, the long-term care ones go up to age 80, but we do have one or two carriers that go up. Now, I will say to your point, what that looks like is that's more life insurance that you can accelerate that death benefit for. Now, you can't say long-term care because it's considered life insurance, but it's called chronic care. So if anybody on this call today has a life insurance policy and they see that they have a chronic care rider, what that essentially means is that they're able to accelerate the death benefit for, a long-term, home health care need, nursing care. And you can, all the triggering effects, in order for you to start the long-term care, it doesn't matter if it's the linked benefits, it doesn't matter if it's the traditional long-term care, it doesn't matter if it's a hybrid. It's 2 of 6 activities of daily living that you can't do. So you can't eat, feed yourself, you can't brush your teeth, you now qualify. So 2 of the 6, all you need is 2 of the 6. There's even, so let's just say, let's go to the underwriting, Sebastian. So let's just say you have somebody, and I come in and I am just not healthy. I didn't listen to Jason when he was on that call. I waited till I was not healthy. Oh, sugar, now I need to do something. They do have long-term care annuities out there that are funded with non-qualified money, but because they're an annuity, they don't really look at the health. So they are long-term care based, but it's on an annuity chassis. So again, it doesn't, whatever the scenario is, as long as there's a will, there's a way. So we can find some sort of answer for most people. Did that answer your question?
That was good. Thank you.
All right. All right.
Anybody else have questions on the call?
All right. Looks like I did a crackerjack job then.
There you go. No, anything else you want to add before we let people get back to their evenings?
I just want to make sure I appreciate the time being on here. Are you talking to me? I'm sorry.
Yeah. Yep.
Oh, okay. Yeah, I mean, I appreciate you allow me the time to get, do some FaceTime with everybody. Definitely everybody go out there, reach out to Sebastian. What I love about Sebastian is that he's not only a fantastic human being, he's a great teacher too. So he'll sit there and make sure that everybody understands exactly what they're doing, and if he doesn't know, he'll tell you. So, I mean, Premier Wealth Fund, they are literally the premier wealth management firm in central Pennsylvania, as far as I'm concerned.
Oh, well, Mark and I appreciate that.
Yeah.
And yeah, it's just so everybody's aware, Jason does work for a separate company, but he's one of our outside resources that we will pull in and help on case design. Mark and I are wealth managers and focus on investments and financial planning, but we do have partners in the insurance world that can help us out with these types of products. But yeah, we appreciate everybody being on the call. As Jason said, if you have questions, just want to talk about your situation, feel free to pick up the phone, shoot us an email. We're happy to have these conversations and walk you through what products are available and might be suitable for your situation. So with that, thank you again, Jason. Thank you for everybody that joined us on the call. Thank you to those watching the recording, and enjoy your evenings.
Thanks, everybody. Have a great evening.
Bye.